Good morning, this is Faggy Hemsey. It's Thursday, September 10th, 2020. It's about 8:55 a.m. in lovely downtown Cape Naples. No, you won't find it on the map, so don't even bother looking for it. It's a coded message. All right, so why don't we do our morning brief here quickly. Just reporting the speed back and forth is 540 each way, so almost 10%, 8% over our rated. So we're good. Welcome to MZ Analytics. We do these daily, and we post them on our videos right here down below. If you subscribe to them, you will get you would get an automatic notice every time there's a posting for all our videos that you take to this location, and that's where it is. Boom. All right. We'll change the screens a little bit to catch your attention, so not confused the same. All right, but that's it. And that's where we are. Now I'm going to change the bottom that link down there to actually take us to the video section right on just the channel. That's my bad. All right. Why don't we start with Econo Day calendar? As we always do. That's our Econ calendar. As you know, what's crucial today is and was, because the number just came in, jobless claims, initial jobless claims. Inventories are at 10. I don't care about PPI much. Really, this is not this. Well, with a third of the economy gone, you have to really, with a third of GDP, third of GDP gone, you really have to recalibrate how you're going to read this PPI final demand. But that's if you're a finicky economist, and I'm not, so I'm a trader. But I do read and I listen to a lot of economists and see their dissertations, see what they're up to, what their assumptions are. All right. Jobless claim came very, very, very much in line. 828 versus 884 is almost the same as the last. Yes, exactly the same as that. Last week, that's very steady. So remember, these are initial jobless claims. So the economy is still hemorrhaging. Nothing is getting better. The market is not the economy. Don't fool yourself. Okay, that's where we are now. And tomorrow is. Let's see what do we have tomorrow. Tomorrow we have CPI. We're going to take a look at that, and I think we went over that yesterday. And so you'd see about 0.3 to 0.4. So year to year, you're looking at about 2%. So we're in the 1.5 to 2% area. We don't know. I suspect we're going to have a little bit more here due to inefficiencies here. So let's move on. Let's get to timer charts. Beautiful, beautiful work by Admiral Tico. Our biggest challenge last night was what size of a steak and what type would he like. So we visited Oak Farms. And of all days, he decided to sell for chicken. Can you believe this? Unbelievable. I said, I get you porterhouse. Who would call this drop, cover down there, and gain 92 points the next day on S&Ps? That's 920 points, okay? Now, if you did that, I suspect your better half, your spouse, should get you out to Oaks Farm and get you whatever steak you want, because that's a one hell of a call. Okay, this drop from here, I remember we were short from here, so we took some pain, but this drop and that drop, massive. So, I mean, this drop and this rise. And my people tell me on the biotech side that because AstraZeneca failed on the Oxford vaccine, Fed will come in. Most likely other vaccines may have the same issues, something close to it. Some other problems with it, but a problem. All you need is one vaccine with a problem. You know, word gets out, nobody's going to touch it. You know, nobody. I know some people may have to be, at least in the eye of our current president, volunteers, okay, but nobody's right mind going to touch it now. So, especially frontline workers, that's the problem. So with that said, most likely Fed will come in again, more cash coming in. We were not going to see it from Congress. They're deadlocked, and there's election. So not until after the election. But the Fed doesn't have to work on that schedule. All right, SP1 Momo. I told you yesterday that sell means that you have to invert it. It's just the way it clicked it. It takes a lot more for this to work, especially if the weekly is in a sale. Right now, only daily is. So we ignored it and we were right. SP1 is coming back. Let's see if we can get over the center line. Remember, the scale means nothing. Don't worry about the scale. The issue is the shape. The shape that matters. And as little brethren, the Momo is at negative 3.8. I'll be more delighted after it crosses 0, the center line. Top is 10, bottom is negative 10. And you see where we were. And look at that divergence. That divergence was a killer. Look when that came versus Momo. Momo has a lag. I'm sorry, Momo does not have a lag. SP1 has a lag. So if you use against each other, remember, this is how we came down. I had a webinar back then. We discussed that. As we were dropping there saying, where's that level? I don't know what the level is. But one of my targets is 21.7, which is a December 2018 low, Christmas Eve 18 low. The other one is the election. So wipe out his gains. So he doesn't have to that leg to stand on. And that was at 18,000. But look when it starts giving a signal. Boom, boom, boom. Higher, higher, higher. See? We're still coming down. So we had a very, very early warning system. This is an AVAX, hovering in geosynchronous orbit, telling us what the universe should do. Well, and then look at that. And then there's a divergence there, and there we go. That pulls up. Yeah, look at the low there. That the second low to be tested, but much higher. Well, price already was higher, so that's not divergence. It is pulling up. That's it. I stand corrected. That's not divergence. We already had moved. But we're getting higher lows, and there she goes. All right. SQ. That I have not looked at. Okay, edge back up a little bit. Okay. Basically, mission accomplished. This M said we have a move coming. Now, I don't buy that this is the move. These are far more deeper, out of the money SPX puts or put spreads. So that's the input to SQ is. It's a tail risk, but to the downside. It doesn't measure both sides. You know, a bell curve has two tail risks, but this is the low tail risk, the lower end. And when the big wave is going by, SPX puts in quantity, because you're not going to sell calls here. But if you buy puts in quantity, this thing is just triggered. And you had one here. We had an M here, and then I'll show you. To me, there's a hidden trade coming. That's not showing up here yet. Which is, I don't think they've cashed out those positions. They probably took some gains out, but I don't think they've cashed out those positions. Why? Collection, hello. You got what VIX is doing. You combine this with VIX, you'll be amazed. I may even do a chart like that. SPX, SQ, and VIX. Yeah. I have to work on it. Yeah. See if it makes sense. I got to back test it. Let's go to TD. We pulled back below 25. It was 23 and changed yesterday morning, as you recall. Pre-open. And we're at 41. Nice. Bounce back. Of course, you're seeing the one leg, the fastest leg of the stock RSI, which is probably the most advanced indicator in momentum before CI showed up to the scene. As a matter of fact, the book that Dave got, remember, from Tuchar Chandik, he's the guy who created this. By reading that book, I understood what was the gap. Yeah, like a missile gap. But where's the gap there? What's missing? That's why CI was created, to fly that mission. Okay? Now, one more chart here for you guys. Let's go through that. There you go. There we go. Let's see where we are. Okay. We pulled back. Again, watch the separation of moving averages, mainly because the data itself, the data series is very, very noisy, as it should, as you think. And but what's crucial is our moving averages. Now, see this slope there? It's slowing down a little bit of the 20-day, 20 and 50. You can reset, change things anything you want here. Stock RSI, again, $ SPX alpha, 200 Romeo. So Sierra, Papa, X-ray. Okay. That's a 200. I think they have 52. They have all kinds of different data. You can make all kinds of schemes you want, but you want something stable so that when it gives you a signal, it's reliable. It doesn't give you too many signals, but when it does, is very strong. We don't need too many signals. We have it on OTF. What this does is gives us the trend signals, the trend change signal. Okay, I'm trying to differentiate there for you. So rising a tad, in line, so there's no divergence. Let's hold steady and see where we go. I do believe. Let's go back to Sigma Johns right here. We'll do okay. I think we're probably going to fail around this area, the 2 sigma, wherever that 2 sigma at that time is. We're going to come back up. We're going to go. We're at center. We're going to be over this by the weekend. Monday, Tuesday will be above that. Remember, by Rosh Hashanah, we should be around here. And that's why I'm going to go short. Because that's a seasonality coming in. You sell Rosh Hashanah, you buy Yom Kippur. Okay? Which is 10 days later. It's Jewish high holidays. Yom Kippur is Day of Atonement. My sister will be spending all day in the synagogue repenting. Yes. She's got a list. She's got a list of things she needs to repent. Me, I'm too much quantum physics, so I don't buy any of this crap. It's not for me. All right, let's go to what's next. We did PMT. Let's go to. Okay, we're going to switch now to the next window. There you go. This is right. Okay, let's go to this monitor 3. Okay, this is overnight. We just want to know the range of the motion overnight, very simply. And here's just legal day finished there, and then here's what will happen over there. Remember, this is all considered overnight. It doesn't have to be after midnight. So we're near the high of the day. High of legal day. I'm sorry, at 2 sigma. I'm looking at 30 minutes because most professional money managers look at things at 30 minutes. If they want to look at intraday, they won't go below that. If they're trading their own money, maybe on the side, maybe there are some who trade futures actually on the side to justify being at the desk. It's then they go a little bit lower, but nothing below 30 for data. For decision making, and so because this takes a lot of noise out, and so try to learn to look at 30 minutes every so often just to see where we are. I'm talking about intraday, like once a day, twice a day. Look at 30 minutes, just see where we are. It's simple. You can set it up on your machine. The Sigma channels are simple. These are modified Bollinger Bands, so you can set them up and go. And you want to go from -4 to +4 sigma. All of them. Okay. Let's go to fractals. Okay. The big boys are long here. You can see that. And the CI is coming up steady plus. Bars here. A few drops. Basically, it's been on the long side. Little drop there, but severe. This is short distance. I can imagine just how fast that happened and pulls up slowly. Remember, we go up the stairway, we drop on an elevator. That's how this thing works. So, large. This is the large size blocks. Double top maybe. We'll see in terms of energy, in terms of intensity, if you will. This is to go this way: distance, velocity, acceleration. Okay, basic physics. Distance traveled. At what is speed we met there? So look, it's all positive speed down below. Area under curve. Remember area under curve? Okay. That's basic calculus. And then you get the next derivative, which is not. These are not derivatives, but it close. It resembles that. This is the accelerations. How fast you change the speed itself. Okay. When I go, for example, when things are dull, I'm not trading size. I think on a small account, I'm just doing MNQ up, just to get more familiar with MNQ. The larger account and the CIs are having some sort of an amplitude, the height, okay? Either up or down, doesn't matter. Yeah, this is on the short side, this is on the long side. Then I go to NQ and rev it up. Why? Because I can manage the Momo. In a short period of time, it's going to achieve my goal, what my daily nut is, get that and get out. Remember, you don't invest in the futures. You trade the bursts. So you got to find your spot to trade the burst. If you sit there and try to do it all day, you're getting chopped off. And the days I have trouble is that I've stayed there too long. Yeah. Find your burst, trade it, get out. And as they said in the Wall Street Journal, movie Wall Street, get out while you're young. Let's see. Right now, the small guys have no clue what they're doing. The small bars. This is a couple of guys at a desk at the Seamount rented office. These guys have no clue what they're doing. They're just sideways, back and forth. They're just trading dollars. And so this is time to stay out. Don't touch anything. Look at the CI. Look at the shape of the CI. Totally indeterminate. Okay. Totally indeterminate. That's a determined statistics. That means there's no conclusion. Look at this. So stay out of this for a while. Morning, Ken. How are you, sir? Morning, Keith. Morning, Jeff. And Jeff. Okay. Yeah, we're just coming in. All right. All right. This concludes our morning update for you guys. We call it morning brief. Morning, Simon. And let me get it.